Hello and welcome to TA for Traders. It is Wednesday the 12th of April. I'm Nigel Croft. In this video we'll be looking at two Forex crosses. We'll be looking at cable, which is the UK sterling against the dollar, and we'll be looking at the US dollar also against the Japanese yen. What we'll see is that on cable we're still in a range, and there's no indication which way we're going to break out, and we're just above the middle of the range there. On the Japanese yen against the dollar, we'll see that dollar weakness on all the geopolitical concerns over the last week has driven the dollar down. It's getting towards a key support level. So here we have the sterling daily chart. So each candle represents 1 day's trading. You can see that last 2-3 days there's been an uptick in sterling, and it's taken it up towards the 125 level again. However, if you look at the picture since October, you can see that we're stuck in a range between 127 and 120, and so we're just above the midpoint of that range. The moving averages are hidden just below the spot here, 20 and the 50, both very close to where we are in the market. The 20-day is still moving up, and so will give support. The 50 days just kind of edging downwards slightly. The RSI is indicative of no upside momentum, no downside momentum as well. It's just at 54.65, and the MACD are flat as well. On the weekly charts of cable, you can see this range trade that we've been in, and you can actually see that the 20-week moving average, which is this yellow line, virtually where we are, is moving completely flat, and that the RSI is at 48, giving no sign. Slight positive momentum, I suppose, over the last 2-3 weeks, but nothing spectacular. MACD does look okay on this with the short-term blue line above the red line, but no spectacular. It's still below zero, so not showing any real positive momentum. What we need to see is a break of this trend, and then we'll get the direction. But at the moment, it's not clear which way we're going to be. On the 4-hourly, you can see that I've drawn this downtrend, which we have broken to the upside. So on this 4-hour chart, where each candle represents 4 hours trading, there is some improvement here, and also that's confirmed as the 20 and the 50 moving averages. These are the 4-hour moving averages are ticking upwards. What will happen down the road is that the yellow will cross the blue, which would be a positive sign. RSI actually on this is quite good. It's at 62.51, and also the MACD just ticking back above zero to starting to flash a buy signal on this 4-hour. So the 4-hour is the better chart on this cable, but with the daily and the weekly both pointing towards continued range trading. And on the support resistance levels, resistance at 126.16, then at 200-day 126.80, with support at 124.60, which is the 20-day, and then the second support at 123.66. Now moving on to the US dollar against the Japanese yen, and you can see it's a different picture here. A definite downtrend in place, and the weakness over the last couple of days is taking us towards the lower boundary of this downtrend. What we can see is that the red line here, which is the 200-day moving average, is coming into play. That will be a key support level at the 108.56 level, and you would hope if the dollar weakens down to there, there would be a bounce from there. The RSI also starting to actually to indicate slightly oversold. It's at 32. MACD are negative below the zero and moving downwards. So if anything, one would hope that the support on this daily would hold, would then get another bounce back up. But be aware that on any bounce, the 20 and the 50-day moving average, the yellow line and the blue line here, both tracking downwards and would be resistance levels. Looking at the weekly chart, you can see that we've gone below the 200-week moving average, which did give a bit of support for the last couple of weeks, but has collapsed this week. That's a negative sign. It'll take a long time for that to roll over, but it will happen. You can see the 20 days already rolled down. The 50-week, we might get support from there. That's at 108.32. Again, the RSI is negative, not quite oversold on the weekly. It's at 44.1, and the MACD indicative of negative momentum. So here again, it's a slight negative picture. But again, if we did come back and test the supports and it would be quite natural to have a bounce at that level. But at the moment, pointing to the downside. And on the 4-hour chart, and obviously you can see the damage that's been inflicted here through the 11th of through yesterday, the 11th of April. We're having a slight consolidation at this level. We are slightly oversold. There's no surprise there. But the 20 and the 50 4-week moving averages will come into play very quickly. They're tracking downwards very quickly under a negative influence. The MACD here is also negative. So really on all three charts, it's a negative picture. You should sell into any strength. Looking at the support resistance levels, we've got resistance at the 20-day, 111.21, and then at the 50-day, 112.56, with supports at 108.56, which is the 200-day. And as I said, that would be a good level for it to bounce from, and then at 105.3. So that has been TA for traders on Wednesday, Wednesday, I keep forgetting, Wednesday the 12th of April. Thank you very much for watching this video. If you enjoyed it and you've stuck to the end, well done. Please do subscribe to my channel. There'll be more videos coming. I'm having a break now. It'll be after Easter, but if you subscribe, you'll be told when the next videos come in. Thank you for watching. As always, please remember this isn't an investment advice that I'm giving. It's my own opinions, and it's for educational purposes only. And to that end, please do read the disclaimer. Thank you very much.